Welcome to this week's live. It's Margot Mastery, your heartfelt TFO. I am super stoked to be here with you on this Monday. I trust you all are doing amazing. I come here weekly to share with you around tax, business, and all of the in between, around topics that clients we work with and our community followers have asked to talk about. And it's the perfect time to jump in. What is today's topic? What most investors miss before buying a property. I'm looking to move into our next few weekly lives to talk more about proactive thinking in terms of real estate management instead of it being a very reactive field of what I have come across over the coming years. In case you are new to my channel, I'm Margot Massey, your financial interpreter, business therapist, and also known as a strategy whisperer. So just not your typical accountant. I help entrepreneurs gain control around their numbers and gain confidence around their business and systems and all of the in between. We have a heap of different things that we do. We have a video course platform, and we're basically rewriting how small businesses handle money so that you are empowered and do not feel overwhelmed around growing your business, tax, and all of the in between. So let's jump in. The deal that you're making, I want you to think about it. It isn't just the property. You're buying real estate. It's more than running comps and estimating repairs. The right tax lens can make or break your return on the long-term return on investment. I see this all the time, how the taxes are an after the fact as much as 2 to 6 years later, where people realize this, that it really takes down all of the work that was being done. So what we're going to cover today is tax strategy, where it starts before the deal closes, bonus depreciation versus post renovation, the accountant's role in the due diligence, what happens when investors skip this step, and why tax prep isn't enough. So going back into the list for a second, actually, I just want to put a moment again around the accountant's role in the due diligence. Everybody is so focused on finding the property. Everyone is so focused on the legal component, buying it and getting it a good deal. However, really looking and understanding the ROI before the game is really not talked about. And this is where I really want to zone in and give you some background on this. So why isn't tax prep enough? And what is tax prep? Tax prep is a retroactive and it's a reactive way of looking at your numbers so that you're stuck paying taxes. You're stuck with a liability that you didn't prepare for, and chances are you don't know how to even tackle it. And then it could be into tax resolution, it could be accruing it, you could be ignoring it, fighting between you and your partners. There's all sorts of things that happened, and we want to avoid this. So filing taxes is not the same as planning for them. If your CPA only seeks books once a year, you're reacting and not optimizing. Our systems optimize things on a regular basis, and people like to do things on a less frequent basis. And our systems are built, for the most part, on a more frequent basis because it helps you capture the money before it's too late. The bonus depreciation tab is buy, renovate, and deduct, but not always. Bonus depreciation applies differently before versus after improvements. And missing the window is missing major deductions. We actually have a client we're working with now around this. And because he missed that window, it basically took out the profit of what was supposed to be, and it took down the whole project. It was truly, truly traumatizing to watch all of this hard-earned work, hours, time, strategy, brain power, and all of the things just go down and down and down. The hidden cost of skipping strategy: higher tax bills, missed deductions, inaccurate financial projections, properties to look profitable but aren't. I'll tell you a story. I'm actually looking to buy a house now, and I'm highly considering to buy a full redo house because I just come to the conclusion what I want is not in buying a house that's ready. And considering all of the things that I want in the house, it just seemed easier. And basically, you know, what I'm up against is real estate developers and investors. And what happens is that with that being said, I see the same things happen in real life of what they're doing in these projects so that it becomes less possible. I'm actually seeing it live while I'm trying to take care of my own family with this as well. So what do smart investors do instead? They loop into a CFO like ourselves, like myself, before they go under contract. And they run a pre-deal tax impact scenario, plan with depreciation, and use books to model ROI, not just track history. So the books to the model of the ROI so that you see it literally the visionary and that we're bringing this whole thing together. And when you do the pre-tax scenario, you're able to really avoid credit card debt, bank loans going down, not being intact with your partners and your vendors and all of these things, and just gives you a heap way more possibility, which is my favorite thing. So why does this matter? You wouldn't skip a contractor walkthrough. That's actually what's happening right now for me while this is happening. I have a property and I'm having a contractor walk through it to see if what I'm thinking, how it's possible, and obviously the royal dollar to it all. So don't skip that financial walkthrough either. Your accountant should be part of the due diligence conversation, not a person that you tag in after as an afterthought. And all of you that is happening, hooray for you. But my question is it working? Tax planning is the blueprint behind every strong portfolio. If you buy without it, you're just hopping, the numbers will work. Not hopping, hooping, the numbers will work. And I'll tell you, I ran a practice for myself yesterday around hope versus actions and tangible actions of reliable. And basically, hope leaves you into a pattern of negative thinking and a negative downward loop of liability and debt and all of the things that will take you out of supporting your family, supporting your business to grow and avoid from Peter to pay Paul. So let's talk strategy. Let's book your free tax and acquisition session so that your next deal supports your long-term goals and not just your short-term flips. And let me be a part of this. Now, what we did was here is that we created this QR code that you can scoot on in quicker so that you can have a strategy session with me. And what we're going to do on this session is really just evaluate where you're at. There's no cost to this. This is something that I like to do just so I can help and give value. And if you feel like taking the next step, that's even further, awesome too. But all of you that are listening to this, to their weekly lives, take the step. Let me help you find the money and make more money by doing less, by your intentions and putting the story together. And what I tell you is that I'm always a money finder. And what I could tell you is this as well, is that when you learn about your money, it teaches your clues and your keys to your next step. And with that in mind, I want to remind you is that what smart investors do is that they run the pre-deal tax impact scenarios and to loop in a tax strategist before you go under contract. And that's why this call is so important so that I can help you find that money and we can make a plan better than ever. And chances are do more than what you ever imagined, expected. And with that in mind, I cannot wait to see you on our call. And as any questions, let me know. And I cannot wait to talk to you more.